Why I bought more Zeta after these earnings. So we'll go over my thoughts on how the stock performed, how the earnings numbers were, what were investor fears, and how the thesis looks going forward. So firstly, how did the stock do? How did it react to these earnings? You saw on the day the stock was going up. It was sort of almost reaching 25. And then on this print, it went down directly before leveling off at the end. This kind of shows that the market wasn't really trusting the numbers, so let's dig deeper and see why. So how were the numbers? Was it a beat? Was it a miss? And by how much? So looking at the numbers, it's basically a beat on every line. You're looking at EPS beat, so their profitability is strong. Revenue was a beat. And it wasn't just a small beat, like these are big beats. You're seeing a 5% revenue beat, 11% on EPS. But that's not the full story, so we'll have to dig deeper. So what really matters is the guidance, because the guidance is going to show what's the future of this company, what are they projecting. And they extended their guidance towards 2028, so we can kind of see what they're projecting here. If you kind of see, this is like a exponential curve, like they're really guiding for a lot going towards 2028. 2025 revenue was 1.3 billion. Here you can see in 2028, they're guiding for 2.3. That's like nearly double what 2025 revenue was. And you're seeing every year just these earnings compound. But free cash flow, if we look down here at free cash flow, it's arguably more impressive because you're seeing 2020, a lot of reinvestment. 2021, even more reinvestment, not a lot of free cash. And then you're seeing free cash flow explode towards the end of 2026. And the 2028 numbers here are even more impressive. So in terms of the guidance and in terms of just the normal print, you're seeing beats across every line. Those are the numbers. But this call dug deeper into the partnerships. Recently, they've partnered with Palantir. Several months ago, they partnered with OpenAI and also Snowflake. And here they laid it out. They laid out the timeline. So first it was OpenAI, beginning of the year. Then they launched Athena, which is their own sort of AI interface to work with OpenAI on servicing their ads, on helping them target their consumers. And then by joining Snowflake, basically they made a partnership there to connect with other SaaS companies, which led them to the Palantir partnership, which is arguably their biggest to date. So in terms of the partnerships, we're seeing a lot, right? OpenAI, Snowflake, Palantir. But to understand why so many of these companies are partnering, you have to see the data moats. You're looking at trillions of consumer signals every single month. This is years of data collected, many individuals, and they're really building this identity graph where data is the moat, as they say here, and that's the reason behind the compounding earnings growth as we've seen. Another concern is the valuation. So if we value it against other similar companies here, let's look at the key metrics. So in retention rates, like ZETA is among the best. They have higher retention than CrowdStrike, higher than even Snowflake, and comparable to Datadog. And then if we look here, like Palantir in another dimension. But Zeta is still strong, like 120% is very high. Free cash flow is stronger than a lot of these companies. And even the rule of 40, which measures both revenue growth rates and profitability, 51 is an elite number. So again, you're seeing all of these compound revenue, free cash flow, and their costs are also declining. And look, when you dig deeper, they're covering a lot of industries. They're servicing data to a lot of industries. They're serving companies in travel, advertising, automotive, so cars, consumer, and telecom. So basically everything. They serve most of the Fortune 100 companies. And you're seeing a more specific breakdown here of how many companies they're really partnering with. Most of the largest airlines, most of the largest consumer and retail companies. You're seeing all of these all across the board. 8 of 12 financial services, so most banks, a lot of technology companies. And these aren't like random companies. These are among the biggest, like literally in the top 100 companies of the world. So they've clearly proven their data is valuable. So why is the company still being punished in the market? So here's where I think the concerns really are, because I think Zeta is early in these partnerships and it's not really converting to numbers yet. So market concerns could be on the guidance not converting yet. I think it's still early and like investors could be skeptical. And then when you're looking at their customer count, look, it's still up a lot, still up 17% on the year, but they are decelerating. And if you believe in the thesis, you're gonna have to hope that these partnerships with Palantir, these partnerships with OpenAI, they make more connections so that they can partner with more companies and re-accelerate that growth. Because the last thing you want to see is these numbers stalling. So in short, if you think that these partnerships are going to convert to more revenue, to more customers, and to like expanding fundamentals, then you believe in the story. But if not, you're seeing some early signs of average revenue per user declining and a little bit of those customer count declines. And with those, it's still high. It's just not accelerating as fast. But when you look at retail sentiment, I mean, most investors, I think, they're looking at the fundamentals, they're looking at the guidance, they're looking at the partnerships, and they're thinking, honestly, it's ridiculous. Like, they're thinking the sell-off is ridiculous. And it is about flat now after hours, but the market isn't really rewarding ZETA for what they're doing. And again, it's just a beat across everything. It's a beat on revenue. It's a beat on profitability. You're seeing all the metrics expand. So it's sort of a question of, will the market be patient and reward this compounding over time? Or if it'll take a few more quarters to really prove that they deserve a higher multiple. Another thing was their EPS was reported wrong across multiple brokerages. And this could have been the reason for the sharp initial drop. I guess we'll just have to see if they're going to recover in the coming days or if the market needs a bit more time to test it.